Hello everyone, this is Brandon Garrett with Snow Garrett Wealth Management with a summary of our 2014 mid-year outlook. In this video, we will discuss some of the events that affected the markets and the economy in the first half of 2014. We'll also be talking about what might affect the markets and economy in the months ahead. And remember, please stay tuned at the end for a required disclosure statement. As we expected, markets in 2014 have been less influenced by politics and policymakers than in 2013, and more dependent upon growth. Growth is an essential characteristic of all living things, and in 2014, growth is vital to our outlook for the economy and markets. Our notes from the field contain these key observations and reaffirm our forecast for the second half. After an extreme winter weather-induced slowdown in the first quarter, the U.S. economy began to thaw with the warmer temperatures in the spring. We continue to believe U.S. economic growth is on track to accelerate by about 1% over last year, owing to the return of business spending and the elimination of the drag from fiscal policy. As a result, the Federal Reserve is likely to continue to taper its bond purchases and end its bond buying program in the fall, leaving rate hikes on the calendar for some time next year. Stocks spent the winter months dormant, but emerged in the spring, rising to new highs and producing a gain of about 6% by early June, halfway to our target range of 10 to 15% for the full year of 2014. Historically, double-digit gains are typical for years in the middle stage of the economic cycle. The current mid-cycle environment has even produced double-digit gains in 4 of the past 10 quarters. Critical to our outlook, earnings for the S&P 500 index companies are on track for 5 to 10% growth, with 6% achieved in the relatively weak first quarter. Confidence in the durability of growth may contribute to a slight rise in valuations and, along with earnings growth, generate a low double-digit gain for stocks in the year 2014. Opportunities in the bond market have become scarce. Yields are unattractive and gains are not likely in the second half. We find fewer sectors attractive than at the beginning of the year. We expect yields to rise in the second half of 2014 as global growth strengthens and inflation picks up from the low point in the first half. The primary risk to our outlook is the possibility that better growth in the economy and profits do not develop, which has gained even sharper focus as we move from the threshold of the new year into the midst of 2014. That risk is likely to be more significant in the second half of the year than the distractions posed by the end of the Fed's bond buying program and the midterm elections. Much of the investing industry remains focused on allocating to investments based on their characteristics, diversifying among large and small companies or growth and value types of companies, for example. While there are differences in the performance of these individual asset classes during the economic cycle, there is relatively little differentiation over the long term. In contrast, long-term diversification is more likely to come from incorporating different long-term themes that may include multiple asset classes. Including some exposure to long-term thematic investments may help to provide a more complete strategy that looks beyond the economic cycle. Once again, this is Brandon Garrett with Snow Garrett Wealth Management. I hope you found this commentary interesting and informative. If you have any questions about what you heard in this update, or you would like to discuss your personal financial situation, please give us a call at 817-596-9301. We'd be happy to talk to you.